Hello and welcome to Fireside with the VC. My name is Andrew Romans. I'm a general partner at 7BC Venture Capital, and I'm very excited to have on the podcast Patrick Sheehan from Environmental Technology Fund ETF, whom I've known going back nearly 2 decades. Patrick was with 3i, he both in London, and he established the Silicon Valley office here. And after 21 years at 3i, went on to become the founder and managing partner of Environmental Technologies Fund. Patrick, Happy New Year and great to see you again.
Yeah, thank you. Happy New Year to you too. I hope it's a good one.
Yeah, I'd be shocked if it's not better than last year, but hopefully we're off to a good start with vaccines and all of this. But Patrick, with the new year coming, it's an interesting time to think where are people's attitudes towards climate change, all things environmental, from the air to the soil to the long-term effects. Um, you've obviously been in the venture capital world going back ages. I remember meeting you a very long time ago, but I've tracked you from setting up that first office in
Right.
Berkeley Square up until today. Um, I'm interested to hear about what was in your mind at the time that you established ETF.
Well, right when we started, it was 2006, and I came back from Silicon Valley in 2004 because my kids were growing up. It was a life choice, not a career choice, and I found myself thinking, what did I really want to do? Right? What would make things worthwhile? And the more I thought about it, the more I thought my job is my hobby. Right? I want to keep doing it. I love investing in startup companies, and the people are so interesting. But I wanted to do something as worthwhile as possible, and I was convinced then that climate change was real, and that if I didn't do anything when I knew it was real, how would I answer to my children and grandchildren? And so, with my colleagues, we decided to set up a fund focused on the environmental sector, and this was before the word cleantech really became a common word. So it was a slightly wacky idea, but why not try and prove that venture capital can be useful in the real world? Right, that was the
Mhm.
thinking, and Europe felt like the right place as well as the right time. Right,
Sure.
Europe was in the lead, and it still is in the lead now because we never had to tell anyone that climate change was real. Everyone believed it, and so actually it felt like the right place to be. It then felt like the right time. Um, and so we assembled a team to address it and raise an institutional quality fund in Europe, covering Europe. Um, and I think the only thing we got wrong is it was probably too early, right? It was
Mm.
probably, in reality, a decade too early. And so we and everyone who got caught up in the whole clean tech phenomena had a hard time. And we in contrast to many, survived and are finally prospering. But if you fast forward to the past couple of years, it really is obviously the right time now,
Yeah.
and the world has changed. Happy to talk about it more, but this is so much the right time now, and I really want to see us do more.
Well, I think choosing to. I mean, one, you wanted to raise your kids in the UK and in London, and that makes sense. But Europe really is the right place. I think of Germany with the aristocrats
Mm.
protecting their hunting grounds, and the Black Forest and things. That it's just been native to them rather than early days of China were like growth at any
Right,
cost,
right.
any environmental cost. Whereas now I would think when you said Europe is in the lead, I was thinking, is China perhaps in the lead? Where do you see the global mix of we don't give it all, we don't care about this at all, and this is the biggest issue?
That's a that's a good question, and it's complicated really, and it's unfair to paint simple geographic pictures anymore. But I think we see a level of support from government and institutions in Europe that we don't see anywhere else in the world. And so it's a great place for people to start up environmental companies. China, of course, has got uh, the advantages of a different state organization, shall we say,
That's right.
the questionable advantages. But they can mandate things at scale in a way that just never happens in Europe or the States. So they have their own advantages. But in terms of the early innovations, and a lot of it happens over here actually.
Mm.
And so I'm very optimistic about the opportunities for Europe and the rest of the planet. But you know, we find plenty of great companies to back and support over here. So
Well, I want to talk about where things are today and where we're going for tomorrow, but you have this unique perspective of having been there since before it happened in a way, right? Like when there was a time I remember when anywhere you went in the Valley, New York, London, it was clean tech, clean tech, clean tech, everything. And then you had the kind of, you saw a lot of money plow into it, like New Enterprise Associates overnight has a huge operation.
yeah,
Then
yeah,
overnight it was gone. Like I think the Solyndra downfall seemed to be like a nail in the coffin,
yep,
and and I think those early deals were very capital intensive, right? So there's been a whole renaissance of how to deal with green premiums and solving real
right.
problems, right? Maybe can you give us some perspective of what was it like when you were running around when nobody else was talking about it? In fact, I think you've said to
Right.
me before, ETF, we didn't know what to call it,
Right.
you know, and then maybe you're lucky you dodged a bullet by not calling it clean tech fund or something.
Yeah, well, I never liked the term clean tech or green tech because these labels are popular briefly and then generally attach some sort of odium later. And so we kind of realized that at the time. And as we were setting up and getting going, there was a wave of VC investment going into, since you mentioned solar, into solar in particular. And I remember counting up and discovering at the time, at one time, I think about 2007 or 8, there was over 50 venture-backed thin film solar companies
Yeah.
around the world. And it's just, you know, you couldn't tell which was going to succeed. But so I went around our investors saying we're probably going to do none of them because it reminds me of the DRAM industry, you know, the computer memory chip industry, which is all volume and no margin. And that's not how you make money in venture capital, right?
Right, right,
And
right.
so we need to find companies that can scale fast and have a durable advantage. And so those are the ones that we've looked for.
Yeah.
Equally, if you view waves of genuine change, it's quite hard for venture capital to make money, I think, in the primary change. And to bring this to life, if you look at the car industry, there was a wave of venture capital funds going into car startups. Okay, one has become an enormous success, but I don't remember the rest. I remember one or two, but most people don't remember any of the rest.
Right.
It's very hard to change to with venture capital a primary industry, right? To just put money into car companies when car companies are around the world losing money is difficult. So that first wave of change is difficult. As that happens, though, you get a second wave of change, which is the infrastructure to support the new car industry. It turns out that's also quite difficult for venture capital. That's more infrastructure funding, and again, early funds found both of those first and second waves difficult. But now there's a third wave, right? And this third wave is once you have the electric vehicles, you have emerging infrastructure, then you have the need for services, you have need for tech, right? And this tertiary wave is an area where venture capital can play and still make a huge difference. But it's much more akin to traditional venture capital in a new sector. And so that's where we can really be effective and do well with funds of the scale of typical VC funds.
Right. I think that in the early wave, I remember these very hardware centric
Right.
companies that, you know, you make a mistake with software and it can be fixed. Like, don't go to bed until you fix it. Whereas when you've got these hardware mistakes, like dropping some turbine into a river, that's very punishing to
Uh,
discover any
Absolutely.
lean startup iteration kind of thing.
Uh, yeah, and you have to wait maybe another winter to test things again. So,
Yeah.
so some of those uh, early venture capital investments that people made were into products where people wanted reliability out the gate. They wanted a 25-year warranty on a first generation product, right?
Yeah.
And so I would flippantly say, it's not like software; it has to work, right?
Yeah. There's also some macroeconomic factors that are, you know, I often look as a VC, an entrepreneur, of saying what is beyond our control and what is within our control.
Right.
And let's make some decisions driven by that. There's a lot of things outside of your control, like you might be getting 20% more efficient with your PV cells, and then all of a sudden the price of oil drops by over 50%. And now your options are out of the money, as it were. You
Yeah.
know,
No, if you're sandwiched between two commodity prices, you're in a tough place. But all of this is talking about the negatives of a first wave of uh, venture capital, which is now over a decade
mhm.
past, right? So I think today we're in a much different place, right? And we're investing in mobility, in logistics, in AI, uh, used to make the world more sustainable, and that's actually a very attractive place to be. And the need is far more recognised as well.
Yeah,
You know, if we go back to when we started, we we couldn't. Another way I would characterize this is when we started, we couldn't talk to big oil companies, big energy companies. It's just nonsense, right? And then it was part of the PR budget in reality, right? And then we could begin to talk to senior people. But in the past couple of years, we can talk to the CEOs, and furthermore, we can say, if you don't change your toast, and they just say, "Yep." You know,
yeah,
everyone knows they have to change now. And
yeah.
what's really changed then is um, sustainability is a CEO issue now, and it's being built
Yeah.
into 5-year plans, and that's just fundamentally a different world.
Yeah, I think this is a fundamentally different world because there's a change of going from these kind of hardware centric, capital intensive, binary risk of failure, almost semiconductor type venture economics to where it costs 50 million to make the product, 25 million to
Right.
sell it, and then boom, it's in every fab in the semiconductor universe. Whereas now there's these software driven AI, ML, intelligent software driven systems to drive the operating systems of much of the hardware infrastructure that's been out there and that is being deployed. And I'd say maybe some capital efficient, IoT kind of
Exactly.
intelligent buildings, smart cities type stuff. And then a final background that everyone gives a damn now, where like if like IKEA, I heard some statistics about IKEA. You probably know the real ones that like they consume 2% of the world's wood, which I find difficult to believe when you look at just buildings going up. But
Yeah,
they
but
carry
they
a
are
lot of plastic.
but they are an enormous and evangelically green organization, so I wouldn't be surprised.
Yeah.
Um, and so yeah, we are. I think actually everything's now been accelerated by the pandemic as well, and uh, we've, I in 2019, I remember saying it was a year of fundamental change, and sustainability had finally got to the top of the corporate agenda, and we were seeing radical, rapid change with probably corporates leading governments instead of the other way around for the
Right.
first time. And then along comes the pandemic, and we've accelerated again. And very notably in the past year, sustainability has hit the agenda of the private equity industry in a way that it really hadn't before. And so suddenly everyone's trying to be green and trying to discover what it means, which overall I think is actually great. Actually, it's good for the planet.
I mean, if you think of the amount of time, like we had plans to go to Hawaii, then we scrapped it and said we had plans to go to Mexico. And then I said, look, let's just stay at home. Let's literally just stay at home and win Netflix or something and cook a lot. But I think 2020, because of the pandemic, meant a lot of people spent more time in their homes with their families. So you have, mom and dad are speaking with the kids a little bit more than maybe they did in their normal I'm traveling half the time and jet lagged when I'm home, setup. And that may result in, you hear of John Doerr crying on stage talking to his daughter or something of, you've got to fix this. You can't, pollute the world and not fix it. So maybe COVID is an accelerant on people thinking more about, is it worth it to pay up for a green margin?
Well, I think there's a sea change, and it started with a younger generation than us, so but it's spread, and it's that's a generalization also. But what's really noticeable now is, I mean, if you look at the European Union as an example, their equivalent of Build Back Better, they've got a $1 trillion budget they're committing, right? And green is at the heart of it. because
Yeah,
if you're going to spend a lot of money rebuilding an economy, you're probably going to wonder what type of economy you want.
sure.
And so I think we'll see a lot of capital deployed into green infrastructure and enabling green services in a way that didn't exist before. And by the way, people arguing at the margin what is and isn't green. So, is Zoom green or not? And so that's all a part of a rich and useful debate, I think.
Yeah. What are some of the, just because you've been looking at the everything that's under the umbrella of sustainability, what is green, climate change, all these different things. What are, it seems like a lot of problems that are that really need to be fixed, that are the big polluters, as it were, or wasters, need to be fixed with innovation, right? So
Yep.
coming up with an electric car is innovation addressing all those
Yep.
cars in Milan in a traffic jam, just pumping out the bad pollution. And if all those cars in Milan are electric, that's innovation solving a problem. But there's other big ones that I don't see being fixed, like air travel, a lot of the food and agricultural industry and supply chain. What are the main issues, and like what are the ones where you see technology working, or we still need to dream about it happening?
That's an inordinately big question. so,
Well,
so I think the technology can address all of those things, but maybe in surprising ways. That of course, travel is probably a hard one, but agriculture is maybe going to turn out to be a relatively easy one. Actually, I think we're on the cusp of a big wave of innovation in agriculture, as people. I mean, you look at the artificial meat companies and how they've been doing, and if you can start to apply cost curves that you see in other innovation sectors onto that, then you reach tipping points, right? You reach a tipping point where maybe not in the next 2 or 3 years, but in the next 10 years, it's cheaper to have artificial meat than real old-fashioned meat. And then what happens? And so I think we're in agriculture, a decade away from some profound change. Um, in transportation, it's not just electric cars; it's actually how people choose to move and whether they share transportation and how intelligent the transportation is. So owning cars is actually, for many people, a pretty stupid idea, actually,
yeah,
because they're used a few percent of the time, and sharing those assets would be profoundly more efficient and would liberate space to live in cities and many other things. And so car sharing, we think, is as big and as important as autonomous vehicles, perhaps more so, actually.
yeah.
So
It's hard to hit everyone over with logic, but buying a car, the more expensive it is, the more of a depreciating asset you've invested in. Whereas if you put that money into an apartment, a
right.
flat in London, that's likely to go up in value.
But people in Europe under the age of 30 are not interested in owning cars in cities anymore. I mean, a lot of them don't bother with driving licenses anymore, right? There's a very big attitudinal difference. And so sharing transport, or just using Uber type transport, makes a lot of sense. But the sharing economy is such a powerful idea here. And efficiently using those assets is such an important idea that I think that's another big theme which will run through many sectors, not just mobility, but um, but across quite a number.
And how about skyscrapers, like just the buildings that we work in, how they're built, having PV cells on the glass on the
Yeah,
outside to sensors that know how to get the heat on before your car. It knows you're coming to your house, all that kind
right.
of creating a nerve system. Where are we now in that tech? And I would imagine when there's good ones coming along that can be profitable and make sense and sustainable, you guys would see them.
We see a number of those types of companies. The building sector has been traditionally quite resistant to innovation,
Mm-hmm.
and the economic structure of the industry has made it so. But we're beginning to see change. Smart glass has been around for years, but it's been expensive. The cost of it's coming down. But generally, the way you frame that is innovation in new buildings, right? And new buildings are such a small proportion of the building stock, housing stock, that it's nice, but it's not fundamentally changing things.
Yeah,
There's a number of quite simple technologies to make existing housing and buildings more efficient, which will probably have a bigger impact and
yeah.
maybe be a bigger market as well.
It's a shame he passed away, but one of the first big angel investors that backed one of my startups in the mid 90s was the guy, Mr. Clark, which ran Clark Enterprises. And if you drive around big cities in the United States, you see Clark written on the side of the building that's being built. And these people are billionaires. You meet someone who does the construction in
Right.
Abu Dhabi, in Dubai, in anywhere. They just have enormous amounts of money. If we could get these guys as limited partners in ETF, and now that they are an LP, you're using their cash to be making investments, and they can say, all right, I will put these tiles on the roofs of the multi-tenant unit housing since I'm building it anyway,
Yeah.
and give a $100 million purchase order to that startup.
Yeah. I mean, these things are probably going to happen at some stage. And it's not just the cladding of the housing and putting PV on cladding or into glass. It's actually in some cases pretty simple tech to predict the weather and heat houses proportionally according to those predictions, and some actually fairly simple things which are viable today.
Yeah.
And so I think there's plenty of room for traditional IT type tech to play a more profound role in efficient buildings and housing.
Mhm.
And it's been a long time coming, but probably held back by a number of things, particularly the more industrial Internet of Things, which is now beginning to become rugged, and actually is beginning to potentially merge with 5G and other things in
Mhm.
ways that will be, I think, extraordinarily interesting. And
And
so we're beginning to see the practical emergence of smart things.
with COVID is seeing cities like New York and San Francisco and LA had enormous revenue, and all of a sudden that revenue is coming to a near halt. Just think about transportation of the bus and the
Right.
tube, things like that, right? And then at the same time, a lot of high tax paying people like Oracle are moving to Texas or Austin and leaving. So
Right.
we a big part of the what's required to happen involves the city itself, the municipality, to
Right.
adopt certain
Yep.
solutions in tech. And there's other ways of doing it without the government's knowledge or consent, or feed in tariffs to pay for a green premium. What do you see in the attitudes, good or bad, at the city level, municipal government level these days?
Well, B to G, business to government, is traditionally quite hard because
Right.
government procurement processes are very slow and arduous, and so that's been seen as a difficult area. And I think the I guess the interesting question that arises now post pandemic is whether there's just a lot more capital going into those markets, and so notwithstanding the uh, the long buying cycles, that there's a lot more money going to be around, and so I think we'll see some of those areas beginning to boom. But governments and cities are never easy to deal with.
Yep.
We all like companies where the sales cycle is relatively short, and so business to business is typically easier than business to government, or business to consumer is typically easier again. Um, but I think there's still just going to be a weight of money deployed that we haven't seen for many decades, and that may change some things.
Yeah. I think there's a general attitude of, am I willing to pay more money for a sustainable green solution than, a bad one, an old one? And sometimes you have feed-in tariffs from the government of Spain, and then they disappear overnight,
Yeah, yeah,
shockwave. But I think there tends to be a bit of a Moore's law of things get kind of 20% more efficient every year. without the government, and so eventually it becomes profitable to go sustainable.
Well, solar and wind have pretty impressive cost reduction curves, actually.
Mhm.
The solar, it depends where you choose to read, but call it, it's reducing at 25% per annum, right? So another few years, um, solar is really pretty cheap. Already in many parts of the world, it's the cheapest form of electricity. Offshore wind in the UK has had a similar cost reduction curve, much faster than anyone expected. And so these new forms of energy, notwithstanding the difficulties they have of being intermittent, are becoming cheaper at a rate of knots, right? And we're already past the tipping point of viability without subsidy on these things
Right.
in many parts of the world. Um, I'm sure when we chatted before, I mentioned a while ago talking to a guy in Finland who was building a solar farm in Finland, and I was saying to him, how does that work? You know, it's dark half of the year, and he said, yeah, but it's very light the other half, and actually it's economical to build solar plants in Finland, right?
Yeah.
So these things are going to happen all around the world, and as they're a different type of electricity, they're more intermittent, they require more intelligence, they require battery backups. They will move us towards inevitably a more flexible, resilient, and intelligent grid system, and there's a huge tech need and opportunity in that, right?
Yeah.
That rebuilding of the energy system is separate to your questions around cities becoming smart, but they're interrelated, as is transport. And all these things actually are happening at a similar time and at an increasing pace in a way that is frankly really very exciting.
Well, I mean, you can tell your kids, hey, turn off the lights and save us some money. And that's frugal, I'm from Scotland driven thinking,
Yeah, and they're not going to do it anyway, right? So
and then there's well, this was green. So if you can use IT to change the traffic lights to be more efficient, you're not only releasing congestion, you're making everyone happy. You get Los Angeles becomes livable again as
right.
opposed to being in traffic. And so there's saving money is green, and saving money gets a sales cycle through.
And it's not just about doing the right thing, it's about quality of life as well. If you could make your city literally more green, it's going to be a better place for people to live high quality lives. But the innovations we see are not just in cities and on land, they're in the air, in the sea. You know, in the past year during the lockdown here, we invested in an AI company in the shipping industry, which is making uh, big container ships much more efficient in the way they move around the sea. Right, they enabling them to consume less uh, diesel, to plot their routes more efficiently according to weather and all sorts of other things. And it's a very sophisticated technology which you couldn't have done a couple of years ago, right?
Right. Yeah, yeah. Yeah, that's interesting that, we have the Lego blocks now to solve a lot of problems in a rapid, efficient,
Yeah,
development.
we've seen that again. There was a couple of investments we made last year again in logistics, just enabling companies to see where their things are. Visibility in logistics is really important in terms of driving efficiency, and so we backed a company called Shipio here in Europe, which is expanding incredibly fast doing that, or another company doing more efficient last mile delivery logistics here called Urbance. And again, these companies I think are profoundly green, although they're tech companies, right?
Yeah, they're
Um,
much more in the zone of venture economics than these wind turbines you drop in a
yeah,
river or ocean
exactly.
of the past, of the first wave. Yeah. Yeah. So I'm glad. I wanted to touch on one or two companies that are in this new era of more software driven, more has an ROI that can be demonstrated, but tackling a big industry. So shipping, logistics, that's a great one.
Yeah,
Maybe one other you could think of, Patrick, to
yeah.
share.
We mentioned transportation and getting people out of cars, so I'll mention a couple around there. We have a company called Viewlog, which provides technology for car sharing. and it's being used around the world in cities now. There's increasingly car sharing services happening, particularly in Europe, but also in North America. And most of them, I would say, are powered by our company Viewlog,
So this is,
which
we're
is,
talking about car sharing, like carpooling, not Uber, Lyft type.
yeah, not Uber, Lyft, but uh, like highly flexible zip cars, if you will. You know, you pick it up where the last guy dropped it, well, last person dropped it, and drop it where you want, and the next person finds it there. And these things are actually just better. You get rid of parking problems. You know,
Yeah.
it's just a more efficient way to move around the city. And so these are rolling out big time, and we're seeing some of the big car companies now starting to use this software. So that's one. We have another one.
And by the way, I just want to say, it was maybe more than 10 years ago, a startup pitched me. I don't even remember their name anymore, but they were getting employees of like Google and Apple to literally team up and share the car. And you could say, I like music. I want to listen to heavy metal, Megadeth the whole way into the work, or the opposite. And part of their pitch when they're going to, Google in Mountain View is facing real problems of where
Right.
people live and how many parking spaces you've got in the world's most expensive real estate is an issue. Like they couldn't set up in
Yeah.
Chelsea, London on the King's Road. You cannot park any cars there. So if someone is reducing parking, you
Right.
know,
Exactly.
that is an enormous impact on such a big business with 30,000 employees coming in every day.
Yeah. And we have a company over here called Zelo, which is basically getting people out of cars onto coaches, not in exactly the same way, but there's a lot of big industrial sites outside of cities, right? And they're transport deserts. The only way you can get those to drive. And one of the early adopter customers of Zelo was in fact Jaguar Land Rover, trying to get their employees out of cars because otherwise they'd have to build more parking places on expensive land,
Which is
right?
ironic, I guess.
Which is ironic, but there you go. And um, so they use quite sophisticated tech to design uh, efficient routes to pick people up, which is key, because no one wants to hang around for ages for a bus or a coach, but they can do that, and so then they can get people in and out of work pretty efficiently and in a nicer way. And that, by the way, all these companies have been impacted one way or another by the pandemic. And
I was going to
uh,
say, yeah.
Zelo was mostly helping white collar workers get to work without using cars. And that was great until the week the lockdown struck in the UK, when 90% of their business disappeared in a week, which that
Sure.
looked pretty tough. But they didn't panic, and we after a bit of debate, when a few people around the board were saying, "I know what the recession is like. Let's reduce the workforce radically," and more sensible heads prevailed, and we said, let's have a bit of time to think creatively. There was a slight pivot into helping people who needed to get to work during lockdown get to work, um, and that pivot has resulted in actually a very viable business, which is probably 3 times the size it was at the start of the pandemic
Yeah.
today. And but a lot of the customers now are essential workers going to, it may be hospitals, it may be Amazon warehouses, it may be other things where people just need to get to work and they don't want to or can't afford vehicles, right? So actually, this is very much a UK company, but it's now beginning to expand in North America, where there's every bit as big a need, actually.
The pandemic forced a number of our portfolio companies to change or roll out a new product just to survive. And the result is that they'll have an ongoing revenue stream
Right.
from a product that would not have been deployed. Like Cheetah, which we're in with Peter Thiel, they develop software for restaurants to order
Right.
everything. So shiitake mushrooms, whatever, it was all done on SMS and spreadsheets, where it just becomes like Amazon efficient.
Yeah.
And all the restaurants were closed. Like all the restaurants went down like radically. And so they started secure delivery of your food to your home. So now
Right.
that you don't want to go to the store and catch COVID, you're able to do that. And so that may be a bigger business for them,
Absolutely.
over
And
the long term.
I've been,
There's other examples of that.
yeah, well, I've just been so impressed by our CEOs and our portfolio companies. You know, when they all were working really hard before the pandemic struck, and it impacted all their businesses to some degree.
Yeah,
And but none of them spent any time complaining. None of them were sitting around wringing their hands saying, "What should we do?" That
sure.
actually they all acted fast, and most of them have better businesses today than they did have. But they've been an incredible group of people and really resilient and flexible and determined. And so, you know, it's just an inspiration to watch, actually.
Yeah, absolutely, absolutely. And so with this changing climate of people caring or not caring about adopting a technology solution, that means a customer, and then people even investing as LPs into your fund, how do you find the LP responsiveness to your business now? Because I think there was kind of maybe not a lot of interest, or denying we have a problem, to a lot of hype, to a sensational crash around the Solyndra days, to maybe getting back up to a better place than ever. But I don't know. What do you find some parts of the world? I assume you have LPs from all over the world, but maybe talk a little bit about LP fundraising and that environment for you.
Yeah, and I won't talk in any detail about fundraising because it's not appropriate publicly. But
Right, right.
we did close a recent fund above target, actually just after the start of lockdown over here. So we're quite comfortable with that. Um, but our LPs are mostly from Europe or Asia, and less so from North America in reality, for a whole variety of reasons, and they're quite diverse. They, I think, they all have some genuine interest in and around sustainability, but they're investing to make money, right?
Right.
And we're investing to make money. We're a for-profit fund. There's no compromise. I mean, I would put it really simply that the need is the opportunity, right?
Mm-hmm. Yeah, absolutely.
Um,
And
and so I think all that's happening is the need is becoming much clearer, and we're as a result of the pandemic, we've seen a very clear technology acceleration, right? And McKinsey's whatever they said, 5 years in 5 months. I'm sure they made up that data. Uh,
yeah, yeah.
I presume they did, but there's clearly a massive acceleration of technology adopting that's caused by the pandemic, and I think we're seeing a similar increase in interest in sustainability and an acceleration of desire around it, and so uh, um, uh, you know I think it's oddly gives us cause for optimism amid all the sadness of the pandemic, which I have to recognize.
Yeah, yeah, yeah. No, I think it's true. I think the pandemic has accelerated by a certain number of years, some say 5 years, of the adoption of just digitizing things and digitizing workflows, supply chains, these sorts of things have a double bottom line of it'll be
Right.
profitable and it'll be better for sustainability and the environment. So I think as painful as COVID has been and the death toll and disruptions to people's happiness, we should be able to accelerate our way through.
Well, I think it's important to be optimistic, right? The optimists change the world, pessimists don't. And and one of the things I've loved about working with our entrepreneurs through this terrible time is their resilience and optimism, and that has enabled them to react and adapt, as I said, in extraordinary ways, and they're coming out of it stronger. And
Yeah.
that might sound mindlessly optimistic, but I really believe it. And
No, yeah.
so I think we just have to do our best to help, and try to uh, kind of be there to encourage them. Actually,
Agreed, agreed. I think, 14 years plus 21 years of venture capital. You've seen some win and some come down, and being a cheerleader sometimes is important in itself, but it is inspiring to work with these entrepreneurs that flexibly figure out how to survive when the whole world changed overnight on them. And where are we going to be in 6 months or beyond? The people riding in the coach or the bus, the luxury Wi-Fi bus into work. I don't know when people are going to want to do that again. So you need to chart how is that business going to be, taking kids to school, new markets more effectively, or what changes.
Well, there's always opportunity, and as I say, our company Zelo that operates coach services has never been busier, but they operate very safe coach services today. I have to say.
I'm sure they do. I'm sure they do.
So they, so but actually we even in the past couple of years we've seen a great uptick, I think, in the quality of companies we're seeing and the quality of entrepreneurs, and in the sense of urgency around addressing some of these great environmental problems. And it does make me, in spite of everything, quite optimistic about humankind's capacity to get through all of this.
Well, that's good to hear. And just geographically, you guys are based in London. In fact, I remember you still had this poster on the wall in your boardroom that showed like a glacier dripping, melting. It was like summer
Yeah,
hitting the Arctic. And I think you told me you finally replaced it, which I was sad to hear.
yeah. It's well, it was. We'd had it on the wall for 10 years and it still hadn't melted, so we decided to change it. So we actually moved to a green wall, a living wall,
That's good.
which I haven't seen for a while now because we're all operating remotely. But we thought we should literally go green.
Yeah. No. I know. That's a fun one. And so, closing questions. You guys are London-based, but pan-European. Is that right? So the main
Yes.
you invest in companies, and with your background in Silicon Valley, you probably help these companies expand to Asia through your LPs and to the US through your friends
Yeah.
and stuff like that. But just talking a little bit about what stage are companies at when they should be approaching you guys seeking funding? And
Sure.
geographically, I suppose they should be pan-Europe and the UK, right?
So we will invest in companies based anywhere around the continent of Europe, um, and we'll invest when we see some established revenue, so we can touch the growth, right? So we don't invest pre-revenue, we don't invest in the technology development stage, but we'll invest when they're up and running, they're selling stuff, they can see the growth, and in Europe, Europe's a complicated patchwork quilt of nations. So they're probably selling locally into one country, and they know they want to be global, and that's the time when they're looking around and saying, well, okay, who can help us do that, right? Who's got the network and the experience, and that's when often they find us. Sometimes we find them. Often they find us first, actually,
Mhm.
and increasingly we're finding people coming to us because they particularly companies where there's a sense of environmental mission, they want a like-minded investor, and so that works really well for us. To people want us because of our values, we like them because of their values, and as you know, one of the secrets of success in our industry, if not the only secret, is alignment of interest, right? And
Yes.
so that alignment is really powerful.
Yeah. I find I'm interested in this new Renaissance generation of capital efficient companies applying basic technology, IT, AI to all kinds of large industries to create efficiencies, but with a double bottom line. But the closing point on my end is that a company with no soul has no soul. And I think of the epitome. I was trying to sell a business division of a company I started. We were trading bandwidth, and I wanted to sell the bandwidth trading business unit to a Wall Street trader. And these guys sadly went down in the with the towers, but I remember getting to know their business. They were
Wow.
all going to salaries, it was all compensation. And that one of these traders would quit his job and go across the street for a basis point more income. So there was no soul whatsoever in these companies. It was just worship gold and money. I think with some of these sustainable businesses leveraging technology, they they might get offered a higher salary to quit their job after a tough, hard day. But if you're making a difference and you're doing something good, and there's the right CEO, the right board members, this alignment of interest, then
Well,
that
yeah,
whole company can be way more effective.
I think it's honestly it's just good business, right? that people are driven by a passion and belief. It's good business because they really will put their heart and soul into it. They'll work harder. They'll be dreaming about it at night. Not with a sense of pressure so much as a sense of desire, right? And
Yeah.
so that extra element gives a bit of edge, and um, and actually, I think it gives a high level of integrity, which makes it easier for investors, and it makes things much simpler, right? So we are very much a trust-based business. All venture capital funds have to be. We're minority investors in companies, right? So ethics is of profound importance, and so relating to people on a sense of values is really good business.
Yeah, no, I like the way you say it. It's just simply good business, and it is. And you are clearly aligned. Easy to demonstrate that to any of these entrepreneurs that are tackling these tough problems. Well, Patrick, thank you so much for coming on. Great to see you again.
Nice to
And
see you.
I think with the vaccine rollout, it won't be that long before we're meeting in person and seeing that green wall of yours.
Well, that will be good. I look forward to clinking a glass of English beer with you.
Okay, all right, my friend. Great to see you.
Take care.